Hi, this is Nick Rach with the Earnings Scout, and I want to show you why Bernstein is rated a buy in our system and has an indicator score of 92 out of a possible 100 best in our ranking system. First, I want to show you on our chart here what you're looking at. The red line plotted out on this graph is Bernstein's stock price over the past year. You can see at its high, it was $27.41, and its low, $17.31 over the past year. The blue line is plotting out what we call an earnings score. Now, an earnings score is measuring the rates of change to Bernstein's overall EPS expectations. Now, this is a proprietary blend of the overall expected profitability for Bernstein 6 months to 2 years out into the future. It is not measuring a single period. So what it instead is doing is multiple quarters, multiple years of estimates. We're measuring how those are falling each week, looking out into the future. If you look back a year ago in time, you'll see the blue line was almost falling by 14%. That means Bernstein's earnings expectations 1 year ago were falling at a rate of about 14% last year at this time. Now, this is where we draw the line in the sand, the zero line, to try to reinforce the magnitude here. The zero line, when you have an earnings score above zero, that means the earnings estimates are going up on an absolute basis. Below it, the estimates are going down. The score itself tells you the magnitude by which they're rising or falling. And this is a core of what the Earnings Scout does. We don't care if earnings estimates are going up or down. Most of Wall Street does. That's all they focus on. And we're going to show you that's the wrong way to look at stocks when you're evaluating their expected forecasted returns. What we're seeing here and what we want to measure is, are the expectations getting better or worse? And if you look a year ago, the estimates when they were falling by 14% in third quarter earnings season, and then by the time fourth quarter earnings season rolls around, they're falling by about 5.5% to the first quarter earnings season where they're being raised. Now, what we measure is not all this noise in between of the earnings estimate revisions, but let's draw in the statistical trend line slope of all of those earnings scores over this 1 year time frame. And what this period is going to show is an up and to the right slope. And we're actually taking this slope into account for Bernstein and then ranking it across our 4,500 companies in our database. And then what we can show you here up and to the right means the underlying earnings expectations for Bernstein out into the future keep improving over the past year. Now, we're looking at this not only over 1 year periods when we derive our indicator score of 92. We're looking at this over short term, the medium term, and we would call the 4 quarter or 1 year trend here medium term, and then the longer term, the 2 year trend as well. So we're looking for consistency in that slope. Is it continuing to improve? And as such, our model is saying yes, Bernstein's showing no signs of slowing down on its earnings momentum, and that we think it can be sustained over the next 12 months. Now, another component of our indicator score is going to be the stock return. We're looking at the price. So we believe, and our core principle is that stock prices follow the delta or the rate of change to their earnings expectations. Now, in the case of Bernstein, the stock is down 12.21% over the past year. So this is showing negative correlation to the positive earnings price. We reward that because we want to buy improving earnings expectations at a cheaper price, and you're getting just that for Bernstein. Further, you're getting a 7% dividend on top of that. Now, you factor in all of these improving earnings expectations that our model's suggesting statistically is going to be sustained on a beaten down stock. This is why Bernstein is rated buy. We're a 92 out of 100 in our system. We think you should own the name. Thank you.